All right. Hey, everybody. This is Melissa Swaney, and I am excited to have you guys on today. I wanted to bring you guys a special person that I have coming live with me, and this is Courtney Epps. So I was at a top leader summit a little while ago, and it was all the top network marketing speakers pouring into us. And it said right before the end of one of the sessions, we were going to have a woman come in and talk about taxes. And I remember thinking like, oh, this is so much information already. And wasn't thinking I was going to be too into learning about taxes, but you guys, she blew everybody away. And I wanted to bring this to you guys live on my profile instead of just bringing it into my team, because I think it's incredibly important to fully understand and be educated on the benefits of owning a home-based business. I know there's a lot of stereotypes out there, and people have their own feelings about it, and a lot of, sorry, that's my dog. She's got bronchitis. A lot of, stigmas about it, but I really wanted you guys to be educated. So I wanted to introduce you to Courtney Epps, you guys. I started following her right after seeing her. I bought her book on taxes, and wow, sorry again. I bought her book on taxes, and then I started seeing her all over social media. She's speaking with Eric Worre at GoPro. She's with Tony Robbins one weekend here. She's all over educating everybody on this. So I'm very excited. I wanted to introduce you to Courtney Epps.
Hey guys. So I apologize. I've been sick all week, so I probably don't look my best, but I wanted to let you know, I'll give you some information about me along the way. But what excites me about all of this is that, we have the ability to teach people how to free up money. And that's super exciting. So, I love educating the population on why you'd be brain dead not on a business. And we're just going to go ahead and dive right into my presentation. So I'm going to share my screen here, and let's see. We don't need to do taxes today, at least. Okay. All right, so just a little bit about me. This is when I'm pretty and dressed up. So this is a picture of me. The name of my company is called Outside the Box Business Solutions. And this is my family. I have 6 children. They range from 17 to 7. I am obviously an author, a speaker, and I'll, give you some access to my book at the very end of this. But, what I love to tell people that I do for a living is I'm a tax strategist. So I find money and I free that up for people so that they can get access to that and utilize that in order to grow their business, in order to take more vacations, whatever they want to do with it. I currently live in Greenville, South Carolina, and we have a full service accounting firm here in Greenville, and we operate all over the country. So we have clients that in every single state. And what I love to do, I love to talk. So I love to educate the population on what I'm going to share with you today. And so here's what happened. Here's my aha moment. So I had someone actually in a network marketing company reach out to me and ask me to do their tax return. And so I, as an accountant of 19 years now, I did not realize how beneficial it was to have a home-based business until I did this tax return for someone. And so they were a W-2 employee the year before, and they were a W-2 employee with a home-based business the year that I did the return. And I was able to save them $4,100 more than they'd ever gotten back. And so that was kind of an eye-opener for me to say, hey, this whole home-based business thing is a big deal, because she wasn't spending more money by having a home-based business. She was now able to take deductions that she was already spending money on to begin with. And so that made a lot of sense. And what I realized going through and doing tax returns for people over and over and over again, I was able to save a family between $4,000 and $8,000 a year by having some sort of home-based business. And the reason why, and you've got to understand this first, is that there are 2 tax systems in our country. One is for a business owner and one is for a W-2 employee. So the W-2 employee system, that was literally created to take your wealth away. And the business owner system was created to give you wealth. And the reason why is because business owners create economy. So they bring more money into the world. Okay. And then they also create jobs. And so someone has to pay the taxes. So that money is pushed off. The taxes are pushed off to the W-2 employees to pay the taxes. And, if it doesn't make sense to you, you got to understand that we, instead of paying taxes as business owners, we're paying employees. So, which is typically more money than taxes. So at the end of the day, it all kind of works out. That's how the system works. So, why you'd be brain dead not on a business is what I tell everyone. And the reason why is because you need access to these tax advantages. And so what I do is I work alongside speakers, coaches, trainers, and network marketers, and I free up money. And I help attract more people into these industries. I help keep them around long enough to win through the tax savings alone, and help them keep more of their hard-earned money when they start making it. And so why I feel like this industry is for everyone and why it's so important is that 46% of Americans don't have an extra $400 to their name, and 69% of Americans don't have an extra $1,000 to their name. So that means that half the people that you're sitting down with or having conversations with or you're friends with, they don't have enough money to buy a tire if their tire goes flat. And that's scary to me. So, and what that is also saying is the system that we currently have in America is not working. Yet it's super funny how, people will tell me all day long, I've had people say in the past, well, network marketing is a pyramid. Well, that's just absurd, because I want you to comprehend that network marketing is identical structure to a brokerage, to a financial brokerage, to an insurance agency, to a mortgage brokerage or a real estate agency. They work exactly the same. And then also franchises. So, what people don't comprehend is that those cost lots of money. Franchises, insurance agencies, real estate agencies, they all cost lots of money in order to get involved. And so what I love about the network marketing industry is that you can do it from home, and you can use the same expenses that you're already spending today, and now you get tax deduction. So moving right along. So I want you to comprehend and see what it looks like to be a W-2 employee in this country. See, the average W-2 employee makes $60,000 a year. That's nationwide. And so I've listed single and married for you, and they have no business expenses, so there's nothing that they can write off. The only thing that they are entitled to are standard deduction or an itemized deduction. So if you go over the standard deduction as far as expenses go, and we'll talk about that in just a second, then you would be able to take the itemized deduction, or an itemized deduction. So the standard is $12,000 if you're single, it's $24,000 if you're married. That gets us to our taxable income. So that's what you pay taxes on. And then here's our taxes. So if you are making $60,000 a year as a single person, you're going to pay about $14,000 in taxes. If you're married, you're going to pay almost $11,000 in taxes. And so here's what's left. Here's our take home after your taxes. Sadly, in our country, the cost of living in America is $53,000 a year on average. So I lowered that just a little for people who are single by $3,000, just to kind of give you a ballpark number. So here's what happens. The average person in America, the average household, is going in debt $4,000 a year to work 40 hours a week, 50 weeks a year, to take 2 weeks paid vacation. And so something about that's not currently working, because we should not be going in the hole to make money. And at the end of the day, that's why we have so much credit card debt. That's why we have so much student loan debt. So here's what happens when you have a W-2 employee now having a home-based business, or just a business owner. At the end of the day, all we have to do is let me go backwards. So I want you to understand what is a tax deductible business expense. So if you're a W-2 employee, you have no deductions other than, like I said, itemized deductions. When you start a home-based business, you now are entitled to business expenses. So what is a business expense? It is any expenses incurred for the purpose of gaining or producing income, and is incurred with a reasonable expectation of resulting in future business, and is reasonable under the circumstances. So what that means in layman's terms, because this is IRS tax code, is that if you're attempting to earn income today or in the future, and it's reasonable, then it's tax deductible. So I'm not telling you that you can go out and buy a yacht or that you could go out and buy a Porsche tomorrow and write it all off on your business. What I'm saying is that when you start a business, you now get to redirect your expenses that you're already paying today, like your cell phone and your meals and your mileage and your internet, and all of these things add up, and you now get to redirect those living expenses and turn those into business expenses by doing something called daily business building activities. And so the IRS allows you these expenses because you're attempting to earn an income. What does attempting to earn an income mean in the network marketing industry or the home-based business industry? It's just telling people about what you're doing. So opening your mouth, trying to talk to them and have a conversation with them about what you're doing, that is attempting to earn an income. And to break it even down further is that the IRS says if you put in 45 minutes a day, 3 to 5 days a week, then that is attempting to earn an income and doing daily business building activities. So here's what happens. As a W-2 employee, we all have living expenses and we have itemized deductions. So itemized deductions are things that we can write off on our tax return if we go above the threshold, the $24,000 if you're married or the $12,000 if you're single. But the problem is most people don't realize there's caps and there's percentages that you have to go above in order to even get a benefit. So medical bills and medical insurance, you have to go above 7.5% of your AGI in order to get $1 of medical bills. So let's say you had $100,000 in your adjusted gross income, and 7.5% of that would be $7,500. And let's say you had $8,000 worth of medical bills and medical insurance, you'd only get a $500 deduction. So that's it. You'd lose out on the $7,500. The same thing with property taxes, real estate taxes, sales tax, income taxes, all of those. Yes, they are tax deductible, but they're now capped at $10,000. So you only get benefit for the first $10,000 of taxes. And then we've got mortgage interest and charitable contributions. So yes, if you go above 24,000 if you're married, 12,000 if you're single, then you're going to get some benefit from here, but you're still losing thousands and thousands of dollars, because regardless if you had these expenses or not, you're still getting the standard deduction. And so what I'll show you in just a minute is we're going to take those same expenses, and when you become a business owner, they're now tax deductible. Well, the next thing that we have are living expenses, and they are not tax deductible if you are a W-2 employee. So we have meals and auto expenses, cell phone, travel, office supplies, daycare. Everybody has these expenses. It's just they're not deductible for a W-2 employee. So when we start a home-based business, or if you're just a business owner like me, then now what happens is that it becomes fun, because these same things are now business expenses. So medical bills, you can pay your spouse, and you can pay them $100 a month. Your spouse could in turn pay 100% of the medical bills. That would be 100% deduction for you guys as a fringe benefit. So, that's something that me and Melissa set up for her. So she has medical bills, she pays her spouse pays the medical bills. That 100% of those medical bills are in turn carried back to her business as a business expense. And these are just examples of kind of averages that I see. They're not minimums, they're not maximums. And so for those of you, I just want to kind of nip that in the bud right now. For those of you that think there's some sort of maximum that you're allowed to take as far as business expenses, that's not true. You should take your actual expenses, what you're actually spending money on for your business. So medical insurance, 100% tax deductible for a business if you own a business. So that's a big deal. Property taxes, this would be things like vehicle taxes. We have clients that have RVs and they travel around the country and they utilize that RV in order to build their business, to go see clients, to go see teammates, whatever. So a portion of those property taxes can be written off up to your business use percentage. So if you used 80% of your vehicle for business purposes, you can write off 80% of the property taxes. Then we got business use of your home. So business use of your home entails utilities, repairs and maintenance, insurance, taxes, mortgage interest, all that can be written off, plus you can depreciate the home. And I have so many people say, I've been told that business use of your home can trigger an audit. In 19 years of being an accountant, and doing tax returns every year at tax season, I've never had a single client audited for business use of your home. So if that were the case, and 75% of our clients own their own home-based business, that if that were the case, then, and they were to be audited, I would think that we'd have at least a couple of them. So, don't freak out or worry about what someone says that's going to trigger an audit, because it's just not true. So charitable contributions is one of my favorite things to talk about as far as a business expense, because you can give from a gross income level instead of a net income level, and you can make your charitable contributions turn into what's called cost of goods sold items. And so let's just say this highlighter, for example, if I was selling highlighters, for every highlighter, I could do something. I could give money away. Or for every dollar that I bring in, I could give money away. It could be for every product. It could be for every customer that you have. So any of these would benefit you. You just have to make it your model of giving, is that you're giving from a gross income level, or for every product or for every service. And by doing so, now your charitable contributions become cost of goods sold items, and it's 100% tax deductible as a business expense. So that being said, I pick up the phone and I call Melissa and I say, hey, Melissa, I've got something I want to share with you. Let's go have lunch. Me and Melissa are friends anyway. We're going to have lunch anyway. So I get in my car, I drive to Melissa. I get to write off 58 cents a mile when I drive to her. Now I sit down with Melissa and we're going to have a meal. I get to write off 50% of my meal while I'm having this conversation with her, telling her what I'm doing. And Melissa may say, you know what, Courtney, I love what you're doing. I'm all in. I want to do this with you. Or she may say, you know what, Courtney, I think you're going straight to hell or straight to jail. Either one, but I am not in. And so I'm just going to look at Melissa and say, girl, you don't understand. You haven't been educated on the two tax systems in this country. And so, that's going to make her step back and say, what are you talking about? You don't comprehend that I'm saving money on my taxes by sharing with you what I'm doing. Plus I'm making extra money. And that's the only thing I wanted for you. So at the end of the day, I would kind of share with Melissa, say, hey, okay, I get to write off 50% of this meal because I talked to you about my business while we were eating lunch. I get to write off my mileage to and from here at 58 cents a mile. I get to write off my cell phone because I called you on it. I get to write off my internet because I needed it to run my business. I get to write off my travel because, see, here's what I do. And instead of going to necessarily on a vacation, what I do is wrap around continuing education along with going and having fun with my friends and my team. And I get to write all of that off as travel. So I get to write off my hotel. I get to write off my continuing education events that I'm doing. I get to write off my Uber, my Lyft. I get to write off my flights. All of those things are tax deductible because I'm attempting to earn an income. So, and then I can go on vacations with my friends and my team. And because we're collaborating together and we're there together talking about our business, then that becomes a tax deduction as well. So just a huge, huge benefit. And then I can hire my kids. And so I can hire my kids and pay them to do the things that I would pay someone else to do. And I can literally pay them $12,000 a year and they don't have to pay taxes on it. And I don't have to pay taxes on it. See, what you don't understand, Melissa, is I'm spending the same amount of money that you are. I'm just paying less in taxes. And then on top of that, I've got office supplies. So I needed this laptop in order to do this presentation with you and share with you what I'm doing. And then on top of that, my tax preparation and everything that I'm doing as far as tax strategy, that's all tax deductible as well. So we're not spending more money as a business owner on any of these things. We all still have these same expenses. Yes, you may spend some extra money on certain things like advertising, continuing education. You may or may not, as a W-2 employee, spend any money on continuing education. But what I will tell you is that this past year, I've put more money into my mind in the last year than I ever have in my entire lifetime. And, I'm a platinum partner with Tony Robbins. That cost me about $85,000 a year. That changed my life completely. And what it did for me is it put me at a higher level. And that's what being around the right people, the top 1%, that's what they're going to do, is they're going to put you in a place where you feel like, oh, I've got to step up and be better. And that's exactly what I've done. So continuing education, company events, any sort of personal development is truly life-changing to get involved in. So, and that becomes a tax deduction for you. So, and then you have dues. So your company may have monthly dues that you have to pay. Some do, some don't. And then cost of goods sold items. So cost of goods sold items are products that you buy to resell. They could be samples as well, or are tax deductible. So if you're buying samples and you're sharing that with people, those are tax deductible as well. And then the products that you're taking, you've got to take those products in order to share those with people, or you've got to use that service. So, that becomes tax deductible as well. So now our total expenses here is $35,000. Huge amount of money. And I don't even want to use that number because it seems so far-fetched for so many people that I'm just going to use a $25,000 number for business expenses. So we have the income, we have our business expenses, we have our standard deduction. Here's our taxable income, the taxes, the take home, the cost of living. Here's what's left over. Now we're in the positive, and we haven't even made any money yet in the network marketing industry. But the difference in what we bring home is about $5,600 if you're single, $4,500 if you're married. It's a huge difference, guys. I mean, you'd have to make over $3 an hour for every hour that you work, 2,000 hours a year, in order to be equivalent to the tax savings of having a home-based business. And what if you actually start making some extra money? And I feel like if you open your mouth enough, if you're doing these daily business building activities, you're going to eventually make money. So let's just say you made an additional $500 a month. So the income increased, nothing else changed, but you can see that you're still paying less in taxes, the take on the cost of living. What's left over, the difference is $10,000 a year if you're single and $9,500 a year if you're married. That is an increase of almost $7 an hour for every hour that you work, 2,000 hours a year, just by being in a home-based business. See, guys, and I apologize, I've been sick for the last week, so I'm trying to keep from coughing. But here's the one thing. I had someone come into my office last March, or this past March, and they said, we want you to let us know how much money we're going to have to pay in taxes, because they got a $35,000 increase in pay. So the spouse made $85,000 a year. The wife made, or the husband, the wife made $55,000 a year. And so they'd gotten this $35,000 increase in pay. They literally were only getting an increase in bring home of $13,000. It was costing them $22,000 a year to get that $35,000 a year in pay increase because their tax bracket went up. And so, while they were there, I said, why don't we determine, what if we just kept the 85 and dropped off the 55 and see where that would get you, and how much money would you have to make in order to be equivalent to the 55,000? And we determined it was $1,800 a month. She was only making $21,000 a year off of the $55,000 because she was paying in $34,000 in taxes. That is insane. So many people believe, oh, I just need to go get a second job. Oh, my household just needs to go get a second job. It's crazy, because all you're really doing is putting yourself in a higher tax bracket and paying more money off of all of the money that you have. And at the end of the day, this lady, I said, you could stay at home, find some sort of home-based business, make $1,000 extra a month doing that home-based business, and that would be equivalent to your $55,000 a year paycheck. See, guys, what we don't comprehend is that we're spending so much money trying to make money that we can't realize, like, where did the money go? And it's going to pay taxes. See, the average person in America will spend more money on food, on clothing, on transportation, and housing combined. Like, those four combined, they're going to pay less than they will on taxes in their lifetime. And if you understand that, you have to realize that the most important thing that you can possibly do is tax strategy. That's the thing you need to be educated on, is how to save money in taxes. So if you're making money in the home-based business world, or as a business owner, regardless, when you start making more than what I tell people, $1,000 a month gross income, you need to go ahead and set up an LLC with Secretary of State, with your Secretary of State. And we can help you do that if you need that help. But that allows you, that LLC doesn't do anything but limit your liability, but allows you to do one very important thing. You can either treat your business as a sole proprietorship, which you're going to pay more in taxes, or you can treat it as an S corporation for tax purposes. And what that allows you to do is to bypass 80% of your self-employment taxes. And so here's what happens. Here's an example. If you're making $60,000 a year income from your business, you typically would have to pay 15.3% in self-employment taxes. And so many people, so many W-2 employees think that we pay more as business owners in taxes than they do, because we have to match. This is FICA taxes. So FICA taxes are 7.65%, which come out of everyone's paycheck. And then as an employer, we would match that 7.65%, leading to 15.3%. It's called self-employment taxes. The thing is that what W-2 employees don't understand is that we pay money on self-employment taxes after we pay for all of our expenses. And so those expenses add up massively. And at the end of the day, if you were making 60 grand a year, you'd paid in 15% in self-employment taxes. That's about $9,000. Plus you'd have to pay federal and state. Well, here's the kicker. If you have an LLC and you set that LLC up as an S corporation for tax purposes, you can bypass 80% of that, or about $7,000. The rest of that would flow through to your personal tax return, and you would only pay federal and state taxes. So that's a big, big deal. And so, you know, if you are making more than $1,000 a month gross, you need an LLC. And then if you're making more than $1,000 a month in net income after your expenses, then you need to look into getting an S corporation. So in summary, there's never been a better time to own a home-based business. The tax deductions alone are a big indicator of, you know, you need to start some sort of home-based business, something you're passionate about. Just open your mouth up and start sharing that with people. The deductions that you're entitled to, you should take them. So don't allow someone to tell you that you cannot take certain deductions that I've talked about here. Everything that I'm telling you guys, this is straight tax code. You know, I got this straight from tax code. And, you know, if you want the tax code and you want to go look it up, just reach out to me and I'll be happy to send it to you. Hiring your family is very important, very crucial, because you can hire your spouse and your kids and you can get massive extra tax deductions. One for me, I have 6 children. I can pay them $12,000 a year. I don't have to pay taxes on the money. So that's $72,000 a year in taxable income that I don't have anymore. And my kids, I can shift it off to my kids. That's called income shifting. Okay. Hiring an accountant. I wouldn't suggest you do your own tax return. The reason why is because you are more likely to be audited. And if you do get audited, no one's going to help you with the audit. So I would make sure that you find someone who understands this industry and is willing to help you. Run as fast as you can away from someone who tells you that you're not allowed to take certain tax deductions. They don't comprehend what you're doing. So, you know, that's one of the things that I see every single day. You know, I do between 17 and 22 tax strategy sessions every day of my life. And I have so many people that are overpaying between $5,000 and $50,000 a year because their accountant doesn't understand this industry. So huge deal for you to find someone who does. Tracking expenses, that's one of the things most people don't comprehend. Like, auditors typically win audits because the expenses are not tracked properly. So, you know, if you have an Excel spreadsheet, I would tell you that's not enough. You need some sort of tax software. That's why we created a membership that allows you software and strategy. So we give you all my strategy, and that membership allows you access to a all of your expenses and then track all of your mileage and all that good stuff. And so Melissa can send you the details on that if she wants to afterwards. But, you know, you've got to track this information, these expenses, so that you are entitled to take the deductions that you're entitled to. I mean, it just plain and simple. Auditors don't like Excel spreadsheets. And the reason why is because it's hard to track. So it's hard to track all of your expenses and know that you have everything allocated. So they like things to be very cut and dry. And so any sort of tax software, I don't care if it's QuickBooks, I don't care what it is, but you need something in order to track these expenses. Now, what I want you to know is I want you to share this with everyone. So I want you to help everyone that you know free up $4,000 to $8,000 a year, because I truly believe that that can impact, you know, back in 2008, 9, whenever the housing crash, it's 70% of the foreclosures would not have happened if people would have had an extra I believe it's $350 a month. And they had that, it was just being sent to the IRS and tax money. So all we have to do is help people free up this money and understand they need to be in that second tax system with us. So this is my information. This is my book, More Relaxing, Less Taxing. You can go to morerelaxinglesstaxing.com and buy the book if you want, or you can go to Amazon. You know, if you would like our help, there is a tax strategy session that you can book, and here is the link. And you can also text this number, text tax to the 855 number, and we'll be happy to reach out. But, you know, I want to open this up for questions. One of the things I will tell you is that I have a Facebook group that I put a lot of content in called More Relaxing, Less Taxing. It's a free Facebook group online, and you can go there and join that. That is an open group for anyone in any sort of business or a W-2 employee. It really doesn't matter. And so we're not talking about any specific network marketing companies at all. It's just for you to go and get content and education on how to learn how to save more money. So I appreciate you, Melissa, for allowing me on this webinar or this Zoom, and I'll open it up. If you have any questions, I'll be happy to answer them.
Thank you so much. So yeah, the one thing that I thought was incredibly, let me see, hold on, let me see if this is working. Okay, can you hear me?
Yes.
Okay, just making sure. One of the things that you mentioned that was so eye-opening to me is that you had all those deductions before someone had even started making any money in their network marketing business. And again, my big passion is to help at least educate people on what this industry truly is, to see if it's a good fit for them. After hearing your presentation at that Top Leader Summit or whatever it was called, it made me even more passionate to realize that people don't understand this, and that they really do need to understand, because we make impact on people's lives all the time. And I've seen it change time and time again with the people on my team in this industry, how it's truly changing lives to provide financial and time freedom if they're working their business. But you can take somebody who is just literally sharing and maybe not the top ranks of companies and save them massive amounts of money. And I don't think everybody fully understands that. So I am beyond happy that you were able to come do this. I think it truly is going to help a lot of people to see the potential of what this can be. And I will look to see if there's any questions. I'm on here. Let's see. It's I have got a question. Do you want me just to read some questions to you? Okay. If you haven't paid your children or spouse all year, can you pay them one lump sum before the end of the year to get the tax deduction, or do you need to wait till next year?
I would wait until next year. I mean, you've got to show that you're actually paying them to work for you. So, you know, you've got to give them a task to do, and you can pay them for anything. It could be social media advertising. It could be, excuse me, it could be shredding paper. It can, you know, I have one of my daughters who does bookkeeping for me. So, but you have to actually pay them, and you have to show that. The other step is we have to put them on actual payroll. So you have to file payroll tax returns every quarter. You know, what I tell people is per child, it's going to save between $300 and $400 a month, every single month that you do that. But we have to actually, you know, it's not just you can say I'm paying them. You have to create a bank account for them. That money has to be moved into their account, and then you have to show payroll tax returns every quarter.
Okay. And then also I've had some comments on here from people in different states that they have different requirements. Like Tennessee, they've been told that they can't, I think, create an LLC or something. Do you have, and like what you're teaching, is it blanket across every state, or there are specific things you need to check in with your state?
I mean, every state has an LLC, so I don't know what that means, but I mean, we have clients in Tennessee. They have LLCs. We have S corp elections. So I'm not really sure about that. But I mean, this is all federal law. So you have an LLC in your state from the Secretary of State, and then we file the S corp election. That goes to the IRS. So that allows you to treat your business as an S corporation for tax purposes.
Okay. I'm trying to find what the specific question. It just says their tax accountant said that in Tennessee specifically, it's better not to file it as an LLC or an S corp. and I've heard that twice now from people in Tennessee. So I'm not sure. Maybe that's something we can.
I mean, that's absurd. So if you are paying money in self-employment tax, so look at if you're a business owner, I think it's line item 14 is other taxes on your tax return. And if you're paying more than $1,500 in self-employment taxes, that's kind of the threshold where you would be better off to have a S corporation than you would to pay the taxes at the end of the day. So.
Okay. And then we've got team members. Obviously, network marketing is across the globe. Is this also advice for someone who's in Canada, someone who's in Europe? Is this?
A lot of the expenses are the same. I mean, they're forms. They don't have LLCs. They have something else in Canada. I don't operate in Canada as far as we do bookkeeping for some clients in Canada, and then we send them to an accountant. But most of the expenses are almost identical. There's a couple tweaks in other countries, but business expenses are pretty much business expenses.
Sure. Okay. And then what age do the kids have to be? Like, what's the youngest age you can hire your child?
It's been held up in court at age 7 as precedent, but you can hire them to do things like modeling. You can hire, I had my 6-year-old, she's 7 now, but I would have her invite people on social media. So there's really not a set age. It's just if you can get them to do work, you can pay them, and you pay them a reasonable salary. What is reasonable? Whatever you would pay someone else to do the job, this would be reasonable, right?
Yes. Okay. We just had a question too. If you set up an LLC or an S corp now, can you use the deductions from the entire year, or just start from the point you set it up?
Right. If you had an LLC prior to, let's just say you did not get the S corp election and you had an LLC in January, you can go backwards to January and treat that the whole entire year as an S corp for tax purposes. If you don't have the LLC yet, you can only treat it from the day you get the LLC. So okay. That's the reason why I tell people, once you are making $1,000 a month gross income, go ahead and get the LLC, because you never know when you're going to start making even more money. So then that allows the space for you to go backwards and treat that LLC as an S corporation.
Okay. So you're not recommending, like, the minute you join a home-based business to go out and get an LLC. You're saying you're still going to get the deductions that you're going to receive. And then once you start making the $1,000 a month, then you go get the LLC to get even more tax deductions. Is that what you're saying?
Not more tax deductions. It just for you to end up allowing your LLC to be treated as an S corporation to bypass the self-employment taxes.
Okay.
The deductions have nothing to do with you. It doesn't matter if you're a sole proprietorship, an S corporation, if you're a partnership, or an LLC, the deductions are still the same. It's just the difference in self-employment taxes.
Okay. So would you say that owning a home-based business is just the smartest thing to do right now at this point, to be able to get all of these other deductions you've been speaking of? Like that, it seems to be a no-brainer from everything I've heard from you. Beyond the stuff that I've already known already about the industry and what it can do for the families, it just seems like it's incredibly important for families at this point.
Well, that's why my book says why you be brain dead, not own a business. I can't fathom giving 40% of every dollar I make to taxes. And that's what happens when you're a W-2 employee. And sadly enough, there's nothing you can do to fix that problem. So, I love to explain to people, W-2 employees make money. They have no say-so over their taxes at all whatsoever. So they have taxes coming out of their paycheck before they ever get to see it. And then, so they're left with, to be able to buy some of their needs and wants. Whereas a business owner, they make their money. They buy their needs and their wants, a lot of them that become business deductions, and then they pay taxes on the difference. And so that's a huge, you're talking about, okay, here's $100,000 that we're going to pay taxes on all of our money. And here's $20,000 we're going to pay taxes on. And we may pay a little bit more in taxes based on a percentage, but at the end of the day, we're going to pay far, far less in taxes over a lifetime than a W-2 employee. It's crazy. It's just crazy to me. So there's no way I couldn't be a W-2 employee. I don't know what I'd do. There's no way I provide for my family. But the reason is because of the taxes. And if you understand the tax benefits of having a home-based business, you would never not own one. I mean, and you would never not attempt to try to earn an income so that you can save money in taxes. Like this stapler, for instance, right? I buy the same stapler at my house. If I'm a W-2 employee, it's not tax deductible. The stapler is tax deductible if I am a business owner. And those things, it's like people they don't comprehend. I'm spending tons of money anyway. I might as well get the benefit from from spending that money, right?
Yes. Well, I won't keep you any longer. I really appreciate you doing this on a Saturday morning, especially when you're sick. I can testify that once I heard her speak and started following her, I joined her group. I had her look at my stuff because I think, and I have had an amazing accountant before, but I think that she really understands the home-based business industry. So that's why for me, it made a lot of sense. So if anyone does want information on her community or her book, just reach out. And I just really wanted to thank you. Again, I'm really passionate about just educating people so they can see if it's the right fit for them. And I think finding a product that you love, finding something that you're already using or doing, and you just share it, opens up so much money for you to be saving for your family. And it's important.
Yes.
So thank you, Courtney. And thanks for everybody watching.
You're welcome. Have a great day. Bye, guys.